Hey everybody, it is Wednesday, June 19th, and today we're going to talk about a couple of earnings picks that we had from yesterday, and we have two more today for tomorrow morning. We'll talk about the Fed, the market as a whole, and some of the more medium to long term trades plays that I have in the portfolio and how they're doing. I didn't put out a second video last night. Just thought I would incorporate it into today's video so that we can have a whole picture of what's going on. So, just as an overview, the S&P 500. This is again the S&P Cash Index. You can see it's up about 0.3% today. Kind of a humdrum day for the most part until the Fed minutes were released and Chairman Powell got up to answer questions and give his speech as well. You can see that the market did get a spike, a good 10 to 12 points. It ended about, a 12 to 13 point spike from, the time that the Fed chair started speaking and the minutes were released, rather. So you see this big spike move, first down, then up, then down, then back up, which is usually the case after the Fed releases minutes. There was no rate cut. I think there was a concern or even lack of a concern or bias towards having a rate cut at this meeting. But I don't think that even though the chair did say that quite a few of the chairs in the meeting did want a rate cut, they did not think it was appropriate for the June time frame. So they are looking for potentially having a rate cut at the next meeting in July. And if you look at the probabilities in the options market around that, there is kind of 100% probability that there will be a rate cut in July, which is what the predictions are right now. So, I mean, we didn't get a rate cut, but the market still didn't tank, which is actually a good sign, showing some strength. You can see here on the right side, we still haven't, we didn't, explode to new highs by any means, but we did hold up pretty well, for given that we didn't get a rate cut, which I think was already priced into the market. So I think the expectation is that perhaps in July we'll get that rate cut. We're still at kind of at this lower high, but today we did just kind of eke over the last high, which was yesterday's high. So we did kind of peek over it late day. We'll see what happens in the coming days and weeks into July. But right now, I mean, all we can say is the market is pretty strong. It's in rally mode. Pretty big V bottom here. Bigger V bottom from obviously last year, December, New Year's Eve, I guess. No, sorry, Christmas Eve. From then on, it's been a huge rally. Had a bit of a pullback in late May, and then since early June, it's been just, rallying. So pretty positive. So it's really hard to think about any short positions, for the long term. I mean, overall, again, I'll say it again on the weekly chart. It still looks like a double top. Depends on whether or not it gets over this 29.54 area. So we shall see. So with that, we'll get straight into the stocks that we were looking at for earnings plays today. So the first stock was Adobe, and I've got some markings here where I traded the stock. So I apologize on the daily. It is kind of crowded, but you can see it at least on the intraday chart. So with Adobe, last night when we made the video, it was around this 286.46 area. So what I had talked about is the potential for it to fill the window between the 286.46 and the 291.71 all-time high if it was, kind of showing strength in after the open, but also that it could potentially, if it showed weakness and broke below this trend line right here, that it could have a drop down to fill the gap to 280.57. So those were the two plays in mind for this stock. you can see again that just as Restoration Hardware did pre-market, it actually um, did almost get all the way up to that 291.71 all-time high in the pre-market. So showed a good bit of strength going into the open. Um, at the open, it actually did not uh, go higher immediately. So you can see it started to kind of break down a little bit from the open. You can see that the first 2 minute bar, and it's actually the first 1 minute bar also, spiked all the way down to just below this 285.32 pivot here, which is this pivot that we were talking about previously. It kind of consolidated around that area. Did not ever get down to this trend line that we had talked about it having to break through before we would want to fade this stock. So you can see it did actually show some strength and came all the way back up and crossed through above the first 1 minute high and 5 minute high actually. So as as you can see, it did make kind of a pop up there, then started to drop. So as it crossed back over this 286.46 pivot, because I like to wait. I mean, if you were a little bit more innovative, I guess, or more aggressive, let's say, more risk tolerant, you could have purchased, bought this stock right here at this juncture above this consolidation. So crossing above this 200 moving average on the 2 minute chart or even 1 minute chart, same thing. And then as it started crossing back above this little consolidation area here, you could have purchased that. You could have made your purchase at that point, and that would have been a good entry point. So this is the consolidation range I'm talking about. So the I personally, I actually like to wait for confirmation. So you can see, let me stretch it out a little bit. So you can see after it crossed back through the 280.46 pivot and started to come back down, and this acted as an area of support versus resistance. I bought the stock going into the strength after this little mini consolidation pullback. Um, so I did have this stock all the way through. It kind of started going, getting really some strong momentum with volume right here through the 289 area. And if you remember, yesterday I did say that 289-ish was my target because on the daily chart of Adobe there was some spiky action in this area. So even though the all-time high was 291.71, this is not the most, it's kind of a big spike here. Again, very very inconsistent trading around that point. So I said my target was going to be 289-ish. So I actually did not stick by that rule, and had to ended up having to get out of the trade as it was breaking down on this bar here. So at this arrow around 288, 30ish, 38 or so, I got out of the trade. So I mean, I still made a good $1.50 on it, which was good. But had I stuck to my guns and gotten out at 289, and what I thought, what I wanted to see is after this consolidation, if it would continue higher to the all-time high. It did not. So as soon as it broke down below this spike right here, this little bar, this hammer, I got out of the position. So it was showing a lot of strength on volume. It had come up from this 285 area already, so probably should have stuck to my target. Sometimes it's good to have a target and stick to it because it was for a reason. So if you have some hypothesis and you want to trade according to that hypothesis, you should really stick to it. It didn't lose too much, but just left money on the table, let's say. So as the stock was kind of going through the day, I actually made another trade on it. So you can see it actually came all the way back down. You could have made a trade here as it bounced back off of this 286.46 support. So you have this tap here, where we actually got in, and then it bounced again and started going back up, and actually went all the way up to 291, the 291 area. like pretty quickly. So you had this big move you could have taken too. I did not take this trade. Instead, what I did is waited for the break above the over, like the high of the day. So if you take a look at it on the 5 minute, you can see here it broke above this little spike here, right? So you have this. Okay, so here's the high of the day so far. It kind of broke above that, started consolidating, and then started moving higher. So during this consolidation, I was watching it for a move back up. Actually took a trade there, and you can see just after this consolidation, I took a trade. As this bar was going over this area of consolidation, and I traded it. I bought most of my position here. Uh, Traded it up to here. This is actually the overnight high, so I actually bought a little more right here at this level, 290.64 ish, and had that. It actually I held it until you can see these two big red bars where it retraced that move, and actually to get out break even on that trade. So not the best second half of the day trade. Um, it did end up getting up to almost 291.71 at that point, which is what I was aiming for, right? So as it broke through this, I was looking to trade it to the all-time high, and potentially take that trade. But it had some weakness here, and this was actually, a little bit, uh, later than I should have been trading this stock anyway. So, it was kind of volatile throughout the day. You can see it made lots of moves up and down during the Fed minutes. It had some spikes, and actually, it ended the day up right at that all-time high. So, pretty interesting action late in the day on Adobe. I did fine on it, just not as well as I think I could have done, using a little bit more discipline with my targets, as well as my entry points. So that's Adobe. And the next one was JBL. And I didn't trade this, but it was a great trade if you got in this stock. We talked about JBL. I'll put it on the 1 minute so you can see it a little better, a little clearer. So we talked about JBL, having this window here between, up to this 3150 pivot, 3140, 3150. There are two areas, uh, and it could have. We talked about it could have gotten up there. It was just such a wide range, and there wasn't too much, definition around this chart. So I didn't like it due to that reason. I didn't like it because it was, you can see on the weekly, it is a very choppy chart. But it did have, you can see it's got a top here at 31.77. So around this area, 31.40 to 31.70 was kind of the target, or a potential target, if it were to show strength. So if you take a look at the daily again, you can see it gapped up in the overnight session. It gapped up a little bit, had a little strength, and then kind of consolidated around this line here, this trend line, which is a complex trend line from previously. And it actually gapped up and just kept going straight up all day almost. So if you were to utilize there are a couple of ways to have played this, right? I did not. Like I said, here's the overnight high. We talked about this, right, at 29. We talked about potentially trading it over this area of consolidation or over the overnight high of 29. So that's one entry that you could take in a stock that's got some news or momentum driving it. So over the overnight high of 29, if you would have placed your entry, right, and then you would have put your stop below the low of the day, or the bar that you entered on, which would have been either 28.62 or 28.35. Still pretty good risk to reward ratio, right? So you got about 65 cents max as your risk, and the potential to, make this entire, fill this entire window, or at least a couple of dollars up to this level. So it didn't go that high. However, if you would have traded it here at the 29 area, right when it broke through 29, you would have gotten a good dollar at least, right? So you would have had a dollar at least. You would have been able to trade it through here and up to the 3044 area. This is, again, a 1-minute chart, so it's harder to see. We'll put it back on, let's say, a 2-minute. So here, if you had traded that 29, you could have held it, and this is just a little period of consolidation, held it. And then you can pull up your stops, right? So as it consolidates, your stop would be here, goes up, consolidates, your stop could be here, goes up, and then starts to break down. So this actually could have been your area to sell it. So this bar where it actually fell, if you were really wanting to take it off quickly, you could have done that for $1.24, or you could have even sold it as it crossed through this area, 87 cents, but still a profitable trade. So you have to, just decide what kind of risk reward you're willing to take, ratio, making sure that you have the appropriate risk for your portfolio as well as for your risk tolerance. So that was JBL. Again, didn't trade it, but actually turned out to be a pretty good, strong trade off the open. So what we're going to look at today are two stocks that are reporting earnings after the market closed today. So we have Oracle. Let's see, Oracle and AOBC. So we have Oracle, which of course is a tech and a tech company, and then we have AOBC, American Outdoor Brands. So both of these stocks are reporting earnings right now. I mean, most of them have the earnings have come out on both of them, and the conference calls are going on. So we'll start with AOBC. It's a little bit, both of them have their plus sides. This is a lower priced stock. So you could, if you have a smaller portfolio and want to trade this, you could take a little bit larger size, meaning percentage-wise. It could provide percentage-wise larger returns if you're willing to trade a lower price stock. So with AOBC, here's the weekly chart. This trend line is actually a trend line from the previous highs, all-time high 31.19, and then this lower high. And I've just left it here because it really just consolidated around this area up and down as it continued to show weakness. So if you take a look at the daily on this chart, you can see it has a gap here, a little tiny gap up till like the 1097 area. And then it has this, let's see, we have this kind of low volume area here underneath this gap. Oops, over here. Let's get the right tool. Yeah. So at 1170. So you have some targets to the upside. 50% fib retracement is a retracement from this high 1595 to this low 819. So that's also a target you can utilize. So AOBC looks like is showing some strength. It is poised to gap up around 980 or 990 right now. So that's right here in this area, in the middle of this area of consolidation. So I say if it can make it past this 1005 area here, or even the 1049 overnight high, it could potentially show some strength up to this 50% retracement. This 200 moving average, of course, is at 1196, and then you have some of this weak volume area, this low volume area right here. I'd be careful though because it's already made most of this move. So you can see it spiked up almost immediately to 1049. Where is that in the scheme of things? It's right here. So really you only have about a 50-cent move to the $11 gap fill, which is kind of the more I guess the less risky move to be looking at with respect to this trade. So if it stays right around here, right, I would look to look for it to show some support like it is doing now, this trend line to act as an area of support. And then if it stays around this trend line, you could look for if it shows some strength in the morning, you can look to buy it over that first 1 minute or 5 minute high, and hold that up to either the 1049 area, which is the overnight high right now, or all the way, you can utilize this gap as your target. 1082 or 83 is the start of the gap, and then 1097 is the close. So those are some targets to the upside. Of course, if it shows a lot of strength and goes through that real quickly, you have some other targets. You've got 1170, and then of course this 200-day moving average of 1196. So, a little bit, some small moves. It's like I said, it's not the most. It's an inexpensive stock, so you have to be careful. Make sure that you have targets and that you stick to them, because even like a few cents here and there, if you're larger size, can make a difference. All right. Next up is Oracle. You can see it is also it spiked up to 56.87, which is above the all-time high. Retraced a little bit before the conference call, and now that the conference call is going on, it seems to be popping back up. So the all-time high on this stock is 55.53, this blue line right here. So this chart is, to me, a little bit better than the other chart. You have a few areas that you can take a look at here. Okay, yeah. So this trend line is actually from these two highs up here. So these two lower highs do spike through them, but we'll just consider those look below and fails. Look above and fails. So we're going to utilize this trend line as an area that you need to be kind of aware of as you go into this earnings trade. So you have the all-time high again of 55.53 right here. You've got the trend line to act as also a level of support if it stays above it, or resistance if it falls below it and is not able to recover that trend line. You also have a couple pivots, one at 54.66, and then of course the all-time high. So what we'll be looking for below, below you also have some a trend line here that is a longer-term trend line. On the weekly chart, from this low to the subsequent higher low. You can see it better on the daily chart. And so you have this as a target. Actually, it's a little bit off, so I'll move it to be a little more accurate. Okay. So we have the 200-day moving average down here at 50.66, and this trend line, as well as this 51.50 pivot. So looks like Oracle is going to be strong, but if for some reason it gets weak in the morning, you want it to be underneath this trend line before you do any kind of short position, or before you decide to fade it. It's got to get under, maybe retrace, and it should act as support resistance before you take a short trade on it. I think it's going to be long, obviously, because it's already crossed over that all-time high with pretty heavy volume right off the earnings report. Great earnings report, beat on it beat on the guidance estimates as well as its current quarter estimates. So strong guidance as well. So what we're looking for in Oracle is for a move above this all-time high, at least to this 56.87 level, which is the overnight high, if not more. So what we're going to do is what we usually do when we don't have any reference points above or below a stock. We're going to take a Fibonacci tool here and look at the extension levels. Okay, so in this case, because we're looking at it for the move to the upside, we're going to look at it from the perspective of extension levels to the upside. Now this actually is pretty interesting. We've got this longer term. I didn't realize this was on here. A longer term 50% fib. You can see this gray line right here. So that's from the low of 42.40 to the high of 55.53, which is like a 2 or 3 year low up to the all-time high. So that looks like that also has an extension level of in the same range that we're looking at. So that's a much longer term Fibonacci retracement and extension levels. So you can see here the first target could be this 57.89 area, right? 57.80 area, just under 58 as your first target for your first extension level. So that's above this overnight high. So if it crosses, this is your first target, of course, the overnight high at 56.87. And then if it crosses above that, you have another target here. You also could utilize this 58.50 area, which corresponds with the longer term Fibonacci extension level, and then around 59.50 is the next level, which is good because 60 is a round number. Sometimes, psychologically there could be resistance around that level. So Oracle is what I'm going to be looking at for tomorrow. AOBC, I just wanted to put it out there just so you all were aware. It looks like Oracle's conference call is going well. They're getting some strength. Um, it's shoring up a little bit, I guess, after a little bit of profit taking after the 56.87 spike in the first few minutes. So we'll be keeping an eye on that tomorrow pretty closely for a trade. And again, you have some levels. I mean, it's about $1. You're looking at about $1, $1.50 potential profit there. So keep your stops or mental stops at hand. Make sure to define your risk, and yeah, good luck. Good luck trading with Oracle and AOBC after earnings. They're definitely interesting trades. So I hope that one of them works for you tomorrow. Lastly, just want to go over a couple of trades that I have in my portfolio longer term. So I've got Lyft right now. Actually, just bought into Lyft day before yesterday. So you can see here, this is Lyft on a daily. It's a pretty recent IPO, so there's not a ton of data, but it's already had its first earnings report. It didn't do so hot, but you can see it's made somewhat of a basing pattern here from the IPO time. Of course, this IPO was crazy, like went all the way up to 88.60 the first day. But if you take a look at it, it has since kind of based out a little bit. So you see it started to pop over this basing pattern here. It is a reverse head and shoulders pattern, really, on the 17th, so on Monday. So that's when I bought into Lyft. So I'm holding it. I held it yesterday. It almost shook me out yesterday with its spike down to 61.61, but it's not below my entry point here. So it was barely there. And actually, I think I'm going to leave my stop at this spike low right here at 61.61. So my mental stop on Lyft is the 61.61 area. And that's kind of good. It corresponds well with this basing pattern, and as it's coming out of the basing pattern, I have my stop defined at 61.61. So right now, today it actually was pretty weak today. Retraced most of this recovery from yesterday, but it's still. I just have an alert set so I can tell if it starts to get weak and keep my eye out for my stop. But obviously the goal is for it to get over this 65.54 area, which is a pivot from the third day of trading, and potentially fill this window up to the $75 area. I mean, Lyft is a pretty good model, right? Good stock. People use it. Good company, rather, not stock. So I'm utilizing my theory that I think Lyft is a good company to put a plan in place for my longer term holding. So this is something I'm looking for a few, swing trade for a week or so if it manages to get over the 65.40 level. So I have some profit on it now, so I have a little bit of wiggle room to, if it decides to even just base here a little bit and then make a move. If it doesn't and it fails, I mean, it is what it is. I have my stop defined, so I know exactly where I'm getting out. So that's Lyft. Outside of Lyft, I have one other position. Actually, I have a couple, but I have one that, let's see, I wanted to go ahead and talk about Netflix. So Netflix, you can see I actually am not doing so hot on Netflix with my short position. I was short Netflix with a call spread. So I might have to roll that call spread out another month. Netflix does have earnings here on July 17th, so I probably will roll the spread out uh, to either just before the earnings, so the weekly options that are just before the earnings, or the month after, so to give myself enough time. But overall, Netflix, I mean, it has shown some relative strength. I guess but it hasn't moved very much. It's in this kind of basing, consolidation. Just all the way since February till now. So it did make a lower high a couple of times. So I did get short this stock around this area, and it has since, in fact, today has popped up above this trend line here, and so we'll see how it reacts tomorrow. And tomorrow is going to be the day that I roll my options out. If I still think that the stock is going to show some weakness, so it has bounced up off of its 200-day moving average a couple of times. So I may have to just cut this one as a loss and take it from there. But we'll see how it acts tomorrow and in the days to come before earnings. Right now, I have my order set to where if it makes it to this level, that's kind of my target, and I will be profitable if the theta decay or the stock moves down or the theta decay happens to such an extent that it makes it down. Either the price comes down to this level, or from a time perspective, the theta will decay out of my option spread, and I will be able to close it with a profit. So that's Netflix. Lastly, I had Snap until today. I did close out of my Snap position today. It showed. Honestly, towards the end of the day, it did recover a little bit, and it showed some support at this 1450 area, which could have been I probably should have held it, but I went ahead and got out of it. I've been in Snap since it broke out of this consolidation range right here, this little base, cup and handle ish base, really, um, around 1263. So I got in it this day that it actually cracked above this 1263 area, around the 1290 ish, like right before the end of the day. It was just a breakout, buying specifically on the breakout, and it's done quite well. I mean, it's gotten all the way up to almost $15. But $15 again, psychological number. It showed weakness from that $15 area into today. It was quite weak. It went below 1450 and did come back, but I actually sold it like almost as soon as it went below it on the second bar. So it spiked below. I kind of waited for a minute, but then it showed some resistance again on this 200 moving average on the 5 minute and closed below the 1450 area. So I sold out of it. Again, it did show. It did end up being an area of support actually for the day, so it could continue higher. Snap is. I have a long term. I had a long term leap on Snap, which is for January 2020. It's a January 2020 call, $10 option, $10 strike price rather, call on Snap. So I may get into it again if it shows if it continues to show support around this 1450 area. Simply because if you take a look at this stock on the weekly, it is looking pretty great, right? Pretty defined cup and handle pattern. Even now, like even this 1450 area could technically be an area that it's breaking out from. If you look at this pivot right here from back in June of last year. So it's a pretty big cup and handle pattern actually on the weekly chart as well. So you have some, and then if you think about a move, right, a measured move from this cup and handle base or reverse head and shoulders, however you want to look at it, it could potentially get all the way up to around $19, 18.42 pivot could be a target. So I'll be keeping an eye on it and see how it acts in the next day or two, because I may actually get back into it. I think I got shaken out a little bit too early. I think it was also because of the Fed meeting. That kind of a binary event I don't really like to hold a lot of positions into. So I did go ahead and sell out of Snap, but we'll be keeping an eye on that as well. And that's all I have for you guys tonight. Thanks for joining. Happy trading.